Is your bank statement betraying you? What if I told you your bank account is secretly bleeding money? Not because of lavish spending, but due to invisible leaks you don't even notice. This is happening to thousands of Canadians, and the reason is shocking. For many of us, the frustration is real. You work hard, save diligently, but it seems your financial goals are always out of reach. This feeling that your money isn't stretching enough or even shrinking isn't just inflation. It's a treacherous combination of often overlooked factors, the so-called silent drains. Think of it like having a financial bucket with tiny holes. No matter how much you pour in, it never quite fills up. That's why understanding how to save money in Canada goes far beyond just your paycheck. But don't worry, this video isn't just about pointing out the problem. We're going to pull back the curtain on these financial leaks. From the hidden cost of convenience and subscription traps to a deep dive into your own spending habits and how missed investment opportunities, especially with Canadian accounts like TFSA, RRSP, and FHSA, are costing you dearly. By the end, you'll have a clear roadmap to stopping the bleed and protecting your financial future. The first leak might be right under your nose, so stay tuned. Leak number 1, the stealthy siphons, hidden fees, and subscription traps. Many Canadians pay monthly bank fees, transaction fees, or even ATM fees without even tracking them. Worse still are the subscriptions you signed up for once and forgot about. Streaming services, apps, memberships that auto-renew every month, eroding your balance. Can you imagine $1 here, $5 there, adding up to hundreds of dollars annually? For example, a $10 monthly account fee plus 2 forgotten $8 subscriptions. That's $26 a month, which turns into over $300 a year, vanishing without a trace. The good news is you can stop this immediately. Grab your last 3 bank statements line by line. Identify every recurring fee and subscription. Cancel what you don't use or need. Call your bank to negotiate lower fees or switch to a no-fee account. This simple action can free up hundreds of dollars in cash that was simply leaking away. And the next leak is even more insidious. Leak number 2, the silent shredder, inflation's invisible hand. While you're busy plugging the obvious leaks, inflation is silently working in the background, diminishing your money's purchasing power every single day. If your savings are sitting stagnant in a low-interest savings account, your money isn't just stagnant, it's actively losing value. It's like having a piece of ice slowly melting in the sun. To illustrate, if inflation is at 3% and your savings account yields only 1%, you're effectively losing 2% of your money's value annually. This means $100,000 today might only buy what $95,000 bought a year ago. The solution is simple yet crucial. Explore high-interest savings accounts, GICs, or other short-term investment options that, at a minimum, keep pace with inflation. Don't let your money lose value by sitting idle. But inflation isn't the only invisible cost. The next leak is something most of us pay for without thinking. Leak number 3, the premium price of ease, the convenience cost. Those little conveniences we add to our daily lives come with a price. Using third-party payment apps, opting for express deliveries, or even choosing the more expensive coffee shop on the way to work adds up quickly. Every $5 coffee you buy on your way to work 5 days a week turns into $100 a month or $1,200 a year. Or that $2 convenience fee for an online purchase. It feels insignificant at the moment, but it's these micropayments that become a significant drain on your finances. Prioritize free or lower-cost alternatives. Pack your lunch at home, brew your own coffee, or choose standard delivery options. Be mindful of your microtransactions. Small, conscious choices can translate into big savings. But sometimes the biggest leak comes from within ourselves, and that's what we'll talk about next. Leak number 4, mind over money, behavioral blunders. Our brains are wired for instant gratification, leading to impulsive purchases, emotional spending, or falling for clever marketing tricks. This unconscious spending is a massive financial leak that many Canadians don't even consider when they're trying to improve their personal finances. Have you ever found yourself buying something just because it was on sale, even if you didn't need it? Or that retail therapy after a bad day? These are triggers that make us spend without thinking. To plug this leak, implement the 24-hour rule for non-essential purchases. If you see something you want, wait 24 hours. Most impulsive desires disappear. Track your spending for a month to identify patterns. Understand your spending triggers and find healthier coping mechanisms. Gaining control over your impulses leads to more intentional spending and greater savings. And speaking of savings, the next leak is an opportunity many Canadians miss. Leak number 5, the sleeping giant, not investing your idle cash, TFSA, RRSP, FHSA. Your money sitting stagnant in a low-interest savings account isn't just losing value to inflation, it's missing out on the power of compounding returns available through investing, especially in Canada-specific tax-advantaged accounts like the Tax-Free Savings Account, TFSA, the Registered Retirement Savings Plan, RRSP, and the new First Home Savings Account. Think about how a TFSA allows tax-free growth, an RRSP defers taxes, and an FHSA combines both for a first home. Consistently investing just $100 a month can turn into tens of thousands over time compared to stagnant savings. This is one of the biggest personal finance mistakes you can make on Canadian soil. Act now. Research and open a TFSA, RRSP, or FHSA. Start with a small amount in a diversified, low-cost ETF or mutual fund. Don't delay the power of compounding. Maximize your money's growth potential, leverage powerful tax benefits, and build significant wealth. But not all leaks come from missed opportunities. Some come from the system itself, and that's what we'll talk about next. Leak number 6. CRA's silent grasp, tax traps and missed loopholes. Many Canadians pay more taxes than necessary because they don't understand available deductions and credits or how to properly structure their finances to minimize their tax burden. You might be leaving money on the table without realizing it. Not claiming eligible medical expenses, childcare costs, or home office deductions are common examples. Failing to utilize tax loss harvesting in investment accounts is also a miss. Knowing your tax brackets and available write-offs can save hundreds to thousands annually. To stop this leak, consult a tax professional or use reputable tax software. Educate yourself on common Canadian tax credits and deductions relevant to your situation. Keep meticulous records for all potential deductions. Legally reduce your tax bill, keeping more of your hard-earned money in your pocket. And speaking of money leaving your account, the next leak is something convenience has turned into a silent problem. Leak number 7. The automated drain, the set it and forget it fallacy. While automated payments are incredibly convenient, they become a leak when you forget about them, when the service price increases without your notice, or when you're paying for something you no longer use. An old gym membership, software subscription, or insurance premium that auto-renews at a higher rate all become ghost expenses if not reviewed. Think of all the digital services you've signed up for over the years. Do you actually use all of them? And do they still charge the same price? To plug this leak, schedule a quarterly or semi-annual review of all your automated payments and subscriptions. Confirm you still use and need each service and that the price hasn't inflated unexpectedly. Ensure every dollar leaving your account automatically is going towards something you truly value and need. If you don't, you're simply throwing money away. And that brings us to the most important question. Why does all of this matter so much for your future? These unchecked leaks aren't just minor inconveniences, they are your retirement's secret enemy. Every dollar that leaks out is a dollar that could have been invested, grown, and secured your future. In a personal finance landscape in Canada where every dollar counts, the urgency is real. The time to act is now. Every day you wait, your money is either stagnating or actively losing value, and your financial goals become harder to reach. Remember, it's not just about how much money you earn, but how effectively you plug the leaks and manage the wealth you already possess. Take control. If these insights have opened your eyes to your own financial leaks, please hit the like button on this video, subscribe to my channel for more essential Canadian financial wisdom, and most importantly, comment below. Which financial leak will you plug first? Your journey to financial freedom starts today, not tomorrow. The journey to financial security and freedom isn't about grand gestures. It's about consistently plugging the small, insidious leaks that silently drain your wealth. Today, you've gained the knowledge to identify these shocking reasons why your bank account is leaking money. You now possess the tools to take immediate control, protect your savings, and ensure your money works for you, not against you. Start small, stay consistent. And watch as your financial confidence and future grow stronger with every leak you plug. You have the power to stop the bleed and build the secure financial life you deserve, right here in Canada.